Hey guys, good morning. This is Simon. I'm with TRADEnPERFORM Coaching. What I want to discuss today is how do we get the process down to a pinpoint location. If you follow any of the conversations I have on Twitter, um, people want to kind of knock it down to, oh, you're some kind of wizard at day trading, or you have magical powers, or you overtrade, and it kind of scares people away. So I want to go through the most basic form of the setup. And I'm actually going to use ES instead of NQ. A lot of people get scared away from NQ because of the speed involved. I like NQ because the risk reward is fantastic in it. But let's talk about ES for a second. So I'm going to bring ES over on my chart and discuss it for just a second. Hold on one sec here. Let me find it really quick, and then we will discuss it. So this is ES. And for those, so first of all, let me be very clear. If you would like to contact me for some reason, if you have questions about the room, if you'd like a trial to the room, it's very, very simple. TRADEnPERFORM at gmail.com. TRADE, the letter N, PERFORM at gmail.com. And the entire goal of the room is to take you from struggling or break-even trader to a profitable trader. Very simple goal, right? And a very straightforward method to understand it. So most people are used to looking at charts on a variability that looks like this, mostly 5-minute charts. I don't trade off of 5-minute charts. This is what ES looks like on a 5-minute chart. These are the levels that I post in the room and on StockTwits and Twitter almost every day, right? And they give me a general roadmap. So I want you to look at this map as a city map of locations within your city. They give me ideas of good neighborhoods, bad neighborhoods, target neighborhoods where I might want to move to or away from, right? And it gives me general idea. Like, for example, on this chart, this is the prior day's high. This is Globex high. And I can see that in general, right? What we all want to do is be able to just draw lines on a map and go, oh, I can, go short at Globex high and get a trade. I can go long on the backside test of Globex high and get a long. I can go long at the test of the prior day's high. And what I found through 25 years of trading is that these locations are good, but they only give you a 50-50 shot at success, because as the market rotates and changes, particularly as volatility increases, these levels become less reliable, right? And so then what is the challenge that we all face? The challenge that we all face is being able to put on more trading size to get a greater reward for our efforts, right? So just like in any business, you have to be able to leverage your idea, right, and increase the work. So let's say because of the size of your account, you can trade one contract here, right? One contract. And that's fine. You put one contract with a 10-point stop, and this trade rewarded you, right? But then depending on your contract size, can you put on 2 contracts? Can you put on 5 contracts? Can you put on 50 contracts, right? And all of that relative to your account size. And of course, what's the issue, right? If you put on one contract here and it stops you out, well, it's probably $100, $200 at worst, right? But if you put on 10 contracts, now you're at $2,000. Put on 20 contracts, right? Now you're at $4,000. And then the frustration grows because you're like, I knew they were going to take it off. The backside test of Globex high was good, but, or you can complicate it a little bit. Just stay with me because I promise we're going to get to the good part, right? You use your 50-60 retrace. Well, now do you take it at the 382? Do you take it at the 50? Or do you take it at the 618? Which one do you do, right? And again, all of it is fine when you have lower leverage. But if you want to make a lot of money in day trading, what do we have to do? We have to increase trade size over time. It's the only way that I know to get rich day trading, right? It's the only way that I know to get rich day trading, right? Investing is another story, and we're not talking about investing here. We're talking about day trading. So we have to get specific, right? Also, how do we know whether we're in a balanced day or a day that's going to break to the upside imbalance? So now I'm going to show you that. So first I'm going to take these levels and I'm going to superimpose them over the chart, right? So let me get to my ES profile chart so I can get the chart number. Chart number 8. I'm going to minimize this. I'm going to erase all the lines on this chart. Why is that not coming off? Let's find out really quick. Remove. There we go. And then let's try to put these back on. Go to advanced settings and we type in chart number 8 and hopefully we get magic. And we don't. Hold on one second. Maybe I have this wrong. Let's see if we can fix it real quick. And apologies, but every once in a while we run into a snag, and snags can be easily fixed. This is chart number 8. Let me open this up. Oh, I know what the problem is here. Got it. I was wrong. Apologies. Sunday morning, brain a little bit slow. There, now we have the day. All right. So let me go through the basic concept here with you and see if this helps people understand a little bit better. So number one, let's take this. Let's do this. Let's take away the chart levels and then we'll add the chart levels. Right. So F5. I know people are probably cutting out of the video, but if you'll stay with me, I'll promise it'll explain a lot and it'll help you. So if we look at a very basic concept, okay, what I want to know is two things, right? Let me give a few definitions. This is an algo telling me where my energy points are, where these little triangles are. These are energy points, right? They just give me information of telling me where market participants try to turn the market around. The yellow and blue lines are speed bars. They simply mean these bars were created very, very quickly relative to the bars around them. They often create turning points, right? And then the special things, the ones that we're really interested in, are these little triangles right over here. So I'm going to go to the morning session here at 8:30, right? So you will see at 8:30, this is US Open. And we're going to look, and of course there's variations on this and it can get more complex, so I'm just showing the most simple, basic concept. This is a wave down into the low. This is another wave down right here. So you had a down rotation, it's a down wave, right? So what I want to do is once I'm inside that wave, right, I want to go look at that wave. I want to go, where was the biggest volume in that wave? Okay, so in this case, in this particular wave, all the volume was on, all the volume, and this is ES, is on that first bar, right? And what I want is when all the volume's on that first bar, is I want a triangle to come up and show up somewhere parallel to that, right? So you can see that actually happened quite late, happened all the way over here. But then I get another wave down right over here to the right. See this? This is another wave down. And in this wave down, this bar had all the volume in it. So the first thing you have to do to be able to participate in my room or use the methodology is simply be able to read a volume bar chart, right? Which bar in a down wave had the most down volume? Which bar in an up wave had the most up volume, right? Pretty straightforward, okay? So once we have this piece, the next piece we are looking for is a triangle. So two things. First of all, I would like this high volume bar to come as low in the wave as possible, right? A lot of people call that an exhaustion bar. And remember, we're going from a 5-minute bar to a 1.75. That means in order for that bar to print, ES has to move 1.75 points or 7 ticks. Very, very straightforward. 1.75 or 7 ticks. So as the rotation comes down, right, nothing there. All the waves up here. But then on this next rotation over here, all the volume's on this bar right here. So we're going to erase everything now that I've caught y'all up, and just slow down. Don't try to overcomplicate it, right? Keep it nice and slow. All the volume is on this bar. This bar right here. This was our superstar was here. This is the new superstar. This is our playmaker right here. This guy's telling us, hey, look at me. I have all the volume on me, right? Very, very simple idea. So what do I want next? I want something to tell me when we're going to do something special around that bar. And what this tells me, this little triangle right here, so that white triangle is a signal that an algo has fired. And that algo has told me, right, that everyone, all the energy and all the momentum is changing on this bar. So what I want to do, I want to go long this bar. And so there's a couple of questions that should enter your mind almost immediately. First of all, what is my stop? The stop matters because the stop tells you how many contracts you can put on relative to your account size. Also, there's two things. You can't put the wrong stop in. You can't say, well, I can only afford to lose a point, therefore I'm going to use a 1 point stop. No, you have to say, what is the trade, the proper stop for the trade, and what can I afford? The what I can afford addresses whether you trade the micros or the minis or the micros, right? That lets you adjust for how much capital you can put to risk, right? The bar tells you what the stop needs to be, and the stop generally needs to be 1 bar behind. I use just a simple ratio of double the bar I'm using. So if it's 1.75 range bar, I'm going to use a 3.5 point stop. That means my risk, when I take this trade, I'm going to be willing to risk $162. Let's see, is that right? 175 times 2. Let's see, 175 is 76. It's about $160 a contract, 1.75 points. So if it was 2, it would be $200. It's about $175 a contract that I'm willing to risk on this trade. Now you got to figure out, right? Now you've got to figure out, it's $50 a point, whether I'm going to use the minis or the micros. And you should have that decision pre-thought out, right? That should be very, very simple. A little coffee here. Next thought that's going to go in is, well, what's my target? I like to shoot for a 2-to-1 RR, right? Which means I'd like to get around, if it's 1.75, I'd like to get between 4 and 5 points. It's not quite 2-to-1, but that's the natural rotation in ES. So if I'm sitting here trading, I'm going to enter, and by the way, that triangle does not go away. It does not wash away. It does not reprint. Once that bar completes and that triangle is printed, and by the way, you can see that it's printing before the bar prints. You just needed to complete the bar, right? So it's not like, boom, it appears, you have to panic. You can see that that bar is going to appear as the bar is forming in real time, right? So now I know I have all my pieces. This bar is my superstar. This bar tells me participants. I'm going to change the color so you can see it. This bar tells me participants are attempting to change momentum. And my key is that some part of this bar closes in to, wait a minute, what was my down bar? Ah, there it is. Some part of this bar closes into some part of this bar. That qualifies, right? So we have some simple steps. We were able to identify via the volume, the biggest bar, down bar in a down wave. We were able to identify via the algo when they were turning momentum, right? And now I have my entry, my exit, my entry, and my stop and what I am shooting for. So there's multiple ways to make a target above, and that's a more complex conversation. But if I go for a 2-to-1 RR, if you want to be uber tight, you can use a 175. I'm going to double that stop every time and at least shoot for a 2-to-1, at least a 1-to-1 RR and preferably a 2-to-1 RR, right? So if I'm going to use a 3.5 point stop, right? I'm going to target 3.5 up. So if I enter at 42, 64, 75, I'm going to try to attempt, let's just use 3 points as the example. So I want 42, 60, let's call it 65. 68 is my minimum target. I know that gives me a 1-to-1 risk reward, and if I have higher than a 50-50 win rate, right? If I have higher than it, even if I have 51% win rate, I will be a profitable trader. I know that. And notice I have not tried to put trade location in on this. I have not tried to decide which way the market's going per se. I have not tried to do any complex reading of the market, whether we're going higher, lower, trend day up, trend day down. I'm just reading the chart, right? Now, I might involve a bias. Right now, ES is going up. I might be looking for long trades only. That has been I have multiple coaching clients that will only trade to the long side, and I understand completely, right? So next, and I'm not going to try to drag this on so it doesn't take too long, right? So next, let's go through the day now that you know the process and slow it down. So let's ask now whether we're going to get the short or whether there's a short available to us, right? Let's trade it blindly with no bias, which I don't do in the room, by the way. But let's trade it blindly with no bias. So we just got our first long. Generally recommend skipping the first half hour of the day if you can do so. So starting at 9 o'clock, we just got our first long and we got paid. On this wave up, this is your wave up right here, right? We know this is the biggest volume bar. If I want to short here, I need a bar with a down triangle. So it's telling me where to trade, right? That becomes my entry. This is the bar with all my volume. This becomes my entry at 42.67. Now, as you know, this was Friday. We've been in trend day up. ES is above prior day's high. We're probably looking for longs, and you're going to want to put some kind of bias. And if I was going to put a bias in the market, I'd put a long side bias. This trade, if you entered at 42.67, the best you could have done, the maximum favorable excursion would have been 42.63.75, right? So let's just call it 42.64 from 42.67. It only gave you 3 points. In addition, right, when this came down, you printed another high volume bar. This does not go at the speed of light. You can see this whole rotation here took almost 20 minutes to set up. So you're not trading in any kind of blinding way, right? The majority of the time. When we get volatile, may be different, but not right now. So as we come down, we know this bar has all the volume on it. So I know if I get a triangle up in here, right? If I get a triangle up, right, that I'm going to look for a long there. Or if I'm looking for trend day up like we were on Friday, I'm looking for the longs anyways. I was basically, when you're at the all-time highs, the long side of the trade is just easier, particularly in ES where there's less volatility. NQ is a different story. You can trade both sides. It has more volatility most days, right? So as we come down, okay, so we didn't get our 3.5. We got 3 points was our maximum favorable excursion, right? And you took basically no heat on that trade to get that 3 points. Come back around, we get the highest volume bar, but no triangle, no trade. Now, as this bar comes back up, all the volume's on the first bar of the wave. So unless a triangle closes in, I'm not going to get a short here. But then see right here, these white lines are actually down waves. I'm going to put an arrow on it so everyone can see. Down waves, right? So this is my down rotation. And all the volume in that down rotation comes on that bar. So let's go highlight our new superstar. This is my new superstar. And lo and behold, my algo fires telling me this is my bar to get in with about a 3.5 point stop. Not about, it's 3.5 point stop is what I'm using on this trade. 3.5 point stop. So the first question is, do I get 3.5 points out of that trade? So this would be my entry right here. Let's just call it 68 for quick math. That means I need 71 plus 2 ticks. We obviously accomplished that. And then my maximum favorable excursion before that turned, right, I got a maximum favorable excursion. I would have had an original entry at 68, and I was able to make it to 75, 7 points. Let's stop for a second. So far, that's 3 trades for 10 points. That's $500, right? Saw a survey somewhere where there was over 2,000 respondents on Twitter. They said, if I can make $500 a day, would that have a meaningful impact or change in my life, right? And over 78% of the respondents said yes. That's huge, right? And now we're at 1:30 in the afternoon, right? Now, again, this is trend day up. If you look, when we pushed up into this wave, all the volume came right here. Now, you're going to the last hour. I don't trade the last hour. I'm already done for the day. But let's just carry it all the way through for this day. Here's all the volume, right? If you want to grab this, volume's all on this bar. Now I can look across. I have a requirement. The down triangle bar has to close into the bar with all the volume on it, right? Well, that's right here. Now the next question is, can I get my 1-for-1 RR? We can't because we know we were pushing up pretty hard. The best you could have done on that trade would have been a 42.71 to 42.69.75. It is what it is when we're grinding up, right? So then you'll see as we're coming down here, forgive me, I apologize, caught me by surprise. As we were coming down, right, you have this down wave. And see how you have all this volume right here? Again, this is the last hour of the day. All the volume's here. This would have been a stop for me if I had taken this trade, right? Again, I hate trading the last hour. I think it's choppy. I don't think it's worth the risk, especially when we're up near the highs, right? So this would have been a stop had I taken it. There's no question in my mind. I would have used a 3.5 point stop. My entry would have been right here at, let's just call that 73. 73 minus 3.5 puts us at 70, minus another, that's 70, another 2 ticks, 69.50. Oh, I take it back. You survived your 3.5 to get you to profitable, but even then you had 73 to 76.50. You got about 3 points out of the trade. You got a 1-for-1 RR, but that was pretty squeaky tight, right? And then you'll see here at the end of the day, and if you're trading the last 10 minutes, you're not in my room. That's just crazy. But you can see here, all the volume comes in over here. Here's the down triangle, and it clearly pushed down on the close to a profitable trade, right? So that was no stops. So I went through the day. I didn't make it up. I said exactly what the parameters I would use. And I'm actually going to end the video here because I'm running out of time. I got to go hang out with my family. But that is ES through the course of the day, and it would have generated you on Friday a slow, grindy day, 10 points. I'll do a video on NQ later today. I think that's where the money is. You've got to have the mentality to trade it, but that's how the process works and can grind you through the day and get you paid. This is a process I don't make up. It occurs in real time. It adapts to real-time market environments. It works in high volatility, low volatility. If you'd like to visit the room and see it work in real time, send me an email. TRADEnPerform, TRADE, the letter N, PERFORM @gmail.com. Hope everyone has a wonderful Sunday. I will talk to everyone later. Let's have a great week. I'm not bullish or bearish. I am process-driven, and you should be too if you want to make a lot of money trading. Have a great day, guys. Talk to y'all later.